Hello everybody, welcome back to another valuation investing video. And today in this video, I'm gonna be going over my newest position, and I finally decided to buy this company after many of videos of me saying I want to buy it at this certain price. And with that being said, the newest stock that I bought is Adobe. So I've made so many videos on this company and I've got a lot of views on it. And I've been saying in the past, I've been wanting to buy this company at about $300 to $310 per share. And finally today, the stock has gone to that price. And I decided to pull the trigger on this company. And with this video, I'm going to be showing you guys why I decided to make this decision, why I think this could pan out in the future, and why the negative sentiment around this company is a bit overplayed in my opinion. So with that being said, let's start off by taking a look at Adobe stock today. As we can see with Adobe stock, the stock is under $310 as of today, and it hit its 52-week low. So it hit its 52-week low as of today. This stock is tanking down almost 6% on the day. And the reason for this is because a lot of big banks had huge downgrades on the stock today, causing the stock to fall a bunch. And I truly believe this is a good time to start and add a position to your portfolio. That's just my opinion. Do your own research on this company. I started my position. As we can see, going over to my portfolio as of today, Google is 40% of my portfolio, ASML 32.4%, Meta 21.1%, while Adobe is now 6.5% of my portfolio. So it is a starter position in my portfolio. I would love to add more, and I'll be getting into what price I would be willing to add more to my portfolio. But first, let's get into Adobe's business as a whole. Some people don't know the entire side of Adobe's business. They might know a few of their platforms or apps, whatever you want to call it, with the Creative Cloud side of the business. Looking at the main segment of their business, it's going to be digital media. 74% of their revenue comes from this side, which obviously most people will know of this Creative Cloud side. Looking at like Photoshop, Illustrator, Premiere Pro, and After Effects. Those are the main apps that they have with the Creative Cloud side of the business. However, the other part of digital media people don't really know and talk about is Adobe Acrobat and Adobe Sign, and it generates its revenue from PDF services and e-signature tools, which I think this is a key area for Adobe. I'll be getting into why these are key to each other and why this could be a lot bullish for the future than what people realize. These combinations of their different sides of the business creates a great business, and I'll be telling you why a little bit later. But then let's get to the second side of the business, the digital experience, 25% of revenue. So this is about a quarter of their revenue with the Adobe Experience Cloud. Services include Adobe Analytics, Adobe Experience Manager, and Adobe Commerce. So this is the side for large enterprises, basically for analytics and e-commerce. So that's their other side. And what I want to add, people are very worried about AI for the future with Adobe, and I think this side of the business will not be disturbed at all, and I think this side of the business won't be disturbed at all, and I think this side of the business might be disturbed a little bit, but I think it's going to be disturbed a lot less than what people realize, and I'll be getting into that. The main reason I think it won't be is with Firefly AI. So Firefly AI is their AI basically model they're creating, and this does a lot of cool stuff too. So if you already have Adobe, you get Firefly AI, and this features an image model 5 which produces photorealistic images at high resolutions. Also the prompt to edit feature, so you can just ask it what you want to do while keeping the rest of the image identical instead of you having to edit the image yourself. That's a key ideal for Adobe. And then the other side is Adobe already obviously is the editing side of the business where a human edits the Adobe picture yourself in Photoshop, and then the video for Premiere Pro. That's, I think, a good side, because if they combine AI, especially with image model and video model, you'll have both sides of what a person wants. You can use some AI or just use it yourself to edit. Also with video, I think that's the key reason why people think this is bearish, but I honestly think this could be bullish because both sides of the future and past will be present in this business. And the reason I think this is huge is because while obviously AI can make it easier to make pretty simple images right now, I think also in the future, people want to have control over their own editing. Like other things in life, humans want to control what they have an image in mind. And with something like editing an image that is more complex and more for a person themselves, what they want to create out of it, it's going to be very hard to ask AI to do it to your liking. So that's why I think human experience with Adobe as a whole will still keep this company still doing well, even with AI in the future. That's just my belief. And like I said, looking at the biggest risk with this company is competitive with OpenAI, Canva, CapCut. The sheer risk of the future potential of the loss of market share. So far, we still haven't really seen any loss of market share with Adobe. So that's why this looks still pretty good. We haven't seen any huge signs so far in their financials that they're losing market share. Plus, I still think the moat of this business of Adobe is a lot higher than what people realize. What I mean by this is the switching cost of this business is huge. So the main people that use Adobe is going to be professionals. So professionals have spent years, like it says, developing basically the muscle memory or just learning how to use Adobe. So if you want to switch away from Adobe, it's going to be very hard to switch to either a new software like Canva. Number one, that's the hard part. Number two, Canva is not near the level of Adobe, or any editing is not near the level of Adobe. Adobe is a much more professionally based editing service with their Premiere Pro or their Photoshop After Effects. And that's what is the big moat with Adobe, with the professionals having to use this. And if a production house uses Premiere, everyone in the chain usually needs to stay in the Adobe ecosystem with their project files. So that's what I was also saying about earlier with, say, Adobe Acrobat and all of those other sides of the business. We have the whole ecosystem with Adobe, their ecosystem moat, with the ideation of Firefly, plus creation of Photoshop and Premiere, plus the collaboration and distribution with the Adobe Experience Cloud, and then the Adobe Acrobat. You have to have everything with Adobe in order to use one side of Adobe, and that's the whole ecosystem of Adobe. It's kind of similar to Apple's ecosystem. If you have an iPhone, you have to get the other things. If you have the MacBook, you have to get, say, other things connected with that MacBook. So it's an entire ecosystem with Adobe, pretty similar to that. And then we have the network effects. When your boss, your client, and your freelancer editor all use Adobe, it becomes the language of the industry. And I don't see that going anywhere anytime soon. And that's why I'm so bullish on this company. I think people underestimate how big of a company this is in the professional area and how hard it would be just to go away from Adobe. Then I want to show you guys the future forecast over the next 5 years. This will be big in my intrinsic value calculations. The revenue growth is on average expected to grow about 9%. So on average over the next 5 years, the CAGR is supposed to be about, like I said, 9%. So that's still a very good growth. In the past 5 years, they've grown about 10 to 11%. So slight deceleration, but I don't think it's going to slow down that much. So let's go over to my valuation investing website and take a look at the fundamentals of Adobe and then use my intrinsic value calculator that I've created in order to get a fair value price and see what return I believe I can make with today's price. And as we can see, looking at my website here with Adobe, we can see the market cap's at 131 billion. So this market cap has really fallen. This company was at a $300 billion market cap. This stock's down over 50% since its high. So this is a pretty far fall for this company so far. The thing I really like is the P ratio. It's trading at a very big discount, this company. That's why I really like to see. And also the price to sales isn't too bad for a software company. The free cash flow yield is not applicable. However, if we do some calculations, so with this company, the free cash flow yield for some reason isn't showing up for the trailing 12 months. But if we go over to the balance, the cash flow, looking at the free cash flow, 7.8 billion in 2024. If you just do round that up to about 8 billion, we can get a free cash flow yield with a market cap of 130 billion. This free cash flow yield is about 5%, I would say. That's a very high free cash flow yield for a software company. Almost every big tech company trades at about a 1 to 3% free cash flow yield, if you're even lucky sometimes. That's why I like this. Valuation is very cheap, and the net cash also very good. This company has basically the same amount of cash as debt. That's why I like to see with this company. Look at the financial charts. This company continuously growing at a very nice rate, 11%. EPS growing very good, 18%. They're reducing their debt. Everything looks good about this company. And the 7-step stock analysis shows 6 out of the 7 key metrics as checks, but the debt to free cash flow in reality is less than 1. So this should be a check mark, but for some reason it's not showing up the trailing 12 months, maybe because it's the new year. That should be a check mark in less than 1, meaning they can pay it off in less than a year. So in reality, 7 out of the 7 key metrics are met for Adobe. And if we go over to the intrinsic value calculator, let's put in some assumptions for the bear case revenue growth rate. So we saw analysts expect about 9% on average for the next 5 years. I'm going to put 7% for the bear case. Base case, I'll do 9, what analysts expect, and bullish case 11. 11% I still think isn't out of the realm of possibility because that's what they've been growing at over the past 5 years. If they can stay consistent, this is going to still stay at 11. And for the future profit margin, this is where people probably differ on their stance. Right now, it's just at about 30% profit margin. People do expect this company to see potential compression due to competition and AI taking market share from this company. So if we just assume that it does take some market share, reduce it by 100 basis points, which is 1% of the profit margin technically. So going over there, we're going to put it less than what it is today, 29% profit margin. For the future PE ratio, I think for a company growing at 7% deserves an 18 PE ratio. For the base case, I'm going to do a 22 and then bullish case 26. And finally, for the shares outstanding, this company has been buying back very fast, especially over the past few quarters. Over the past 5 years, they bought back at 2.5%. But over the past few quarters, they've been buying back at about 5% year over year. And I think they're continuing to buy back heavily. That's what I really like about this company, especially at trading at a cheap valuation. But to be conservative, let's put 1.5 buyback for the bear case. Base case, let's say it remains at about 2.5% like they've been doing. And then bullish case, 3.5%. So with these assumptions, if we put this, calculate the intrinsic values, this is what we get. An annual return of about 14.2% for Adobe. So this is why I added a position today. I think you can make 14%. That's a good enough margin of safety for me. Because the market averages about a 9% return, I want to see 5% more than what I think we can get with the market, because this is definitely a more riskier investment than just investing in the S&P 500. And with that being said, the annual return, I think, like I said, 14%. So normally when I see a 14% return with my assumptions, I start to add a starter position. Anywhere from 13 to 15%, I would like to start an adder position. Once I get to an area where I think I can make, say 18%, if we increase it from 5% from the starter position, then I add even more. So what the price I would want to add even more to Adobe would be is probably in the $270 range. So if it gets to that area, I might have to add more unless something crazy changed about this company. So thank you guys for watching this video. Tell me what you guys thought of this. Do you disagree, agree? Do you own Adobe? Please subscribe. Let's get to 5,000 subscribers. Also, like the video and comment, like I said. And go over and check out my valuation investing website. It's called valuationinvesting.money. If you want to go check it out, click right over here on that icon. You can get a 7-day free trial, and then it's only $8 per month. I think it's very cheap. It can help you make a great return on your investment, and it's worth only $8. It's worth it because you can make a huge exponential return just due to these good tools I've created. So thank you guys and see you.